Good evening, guests and members. This is our monthly meeting of the International Model Stock Investment Club. We're a Better Investing model club open to the public. Our meetings are held on the third Monday of each month at this time, except December, when we meet on the second Monday of the month because of the holidays. All our meetings and stock studies are held online, allowing us to have members from around the world. Our current members are from the United States, Canada, and China. Guests, you're going to be observers tonight. You'll be muted during the meeting, but we'll have an opportunity for questions and comments once the meeting ends. Just want to mention that any companies we talk about today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company that you're interested in before making an investment decision. And this meeting may mention products or services that are not endorsed by Better Investing or this club. The views expressed tonight are those of our members and don't necessarily represent those of Better Investing. And we're going to be recording this meeting and we'll be posting it on our YouTube channel for future use. So with that out of the way, I will just go through the agenda very quickly. So we will, I had a piece of business that I just wanted to talk about, and this is more administrative. So I have a presentation that I'm going to share with you. It's only three or four slides. And let me see if I can make myself a presenter. Okay, can you see my screen?
Not yet.
Yeah.
How about now?
I see a title screen is all.
Yeah.
Is-
Says waiting to view Handy Michael's screen.
Oh, okay. Let me just.
Yes, we can see you now.
I see my iClub.
You shouldn't be. You should be seeing something else.
There we go.
How we do?
Topics.
Okay, topics, yeah.
Okay, you can see that?
Yep.
So I'm going to mention or talk about three things. I want to talk about the club portfolio and some new roles and responsibilities, and then updating our Google Drive. So managing the club portfolio. A lot of analysts are predicting that the S&P will underperform over the next 5 years. Our portfolio has been lagging behind a little bit. We have not been getting the same results that we had in the past, and so we need to improve that. And a lot of times when we do our stock studies, we're really sort of focusing on individual stocks and less on the overall portfolio performance. So we pick individual stocks, but we don't look at how those may impact the overall performance. So I just put down some ideas. Going forward, I'd like to suggest that we focus on how the overall portfolio is performing and make decisions about buying and selling that lead us to meeting an aggressive target to beat the market by say 5 to 7%. And in order to do that, I think I'd like to suggest that we put together a review of our existing portfolio, and then look at those sectors that are going to be doing well. As we know right now, there's certain sectors like hospitality, airlines, and so on are going to struggle for quite some time. And while it may be attractive to buy in those sectors, it may take some time before those stocks actually generate any significant returns. So I think we need to give that some thought and look at what sectors are going to be doing well going forward. I'd also like to suggest that we look at some growth stocks in addition to value stocks, and this is a little bit of a departure from sort of the better investing SSG methodology, because as we know, there are certain stocks like, say, Tesla, for example. If you were to do an SSG on Tesla, it would not be a recommended buy. But I think I was reading today that Tesla has gone up over 800% or 700 and something percent so far in the last couple of years. So that's pretty significant. And there are a number of other companies like Microsoft and Amazon and so on. So that requires maybe a slightly different analysis than a straight SSG. And I think it doesn't hurt to look at some of those new and innovative companies that are disruptors in their markets. And while they may not sort of pass an SSG, they certainly are going to maybe have some significant growth going forward, and that could impact the portfolio positively in a significant way. So the other thing is I attended, and I think some of you as well attended a recent webinar by Saul Seinberg, I think it was, from the online chapter about it was called Playing the Investment Piano with Both Hands, and he was talking about using technical analysis to complement the value investing principles and looking at entry and exit points and so on. And I think there's a lot of benefit to doing that sort of thing. So that may be something that we want to look at in the future.
A quick
And
question,
then,
is that available
sure,
as a recording?
it is.
Could you send it out, please?
I will look for it and send it out.
Thank you.
And then the other thing is, we want to maybe consider looking at global equities in addition to U.S. equities, because some of the some of the growth in certain markets, international markets, is going to be maybe more significant going forward, and it would help to have exposure to that. And the last sort of idea is I was trying to do a stock comparison between some of the companies that we have in certain industries, and I couldn't find the SSGs. And I thought, well, if we had all of them in one location, that might help us to do more portfolio sort of analysis and look at portfolio metrics using the stock comparison guide. So those are just a few ideas. So I would like to make a motion, and we can discuss this at the end. I've got a couple of other ideas, but so make a motion to form a stock review committee, and really looking at replacing underperforming stocks in our portfolio to achieve a better return, and then adopt a more rigorous approach to stock studies. So have the whoever's doing a stock study, the group that's doing it each month, maybe have them present first, or have a quick discussion with the stock review committee, make sure that they're looking at sort of the right sectors, they're looking at valid competitors and so on, and get some approval before they actually go and do a whole lot of work, and before they present to the overall club. And I think that would provide some checks and balances and provide a little bit more rigor in doing our stock studies. So that's my first sort of idea that I wanted to get some feedback on. The other thing is, I thought currently we have current roles in the club: president, vice president, treasurer, and secretary. And I wanted to propose adding 2 new roles: assistant treasurer and assistant secretary. And really the reason for doing that is just to, I don't know if I, yeah, no, sorry. That is the, let me go back here. So I didn't have a slide that explained why I'm suggesting this, but I think it's better for succession planning. So if we have, say, especially in the treasurer's role, when I became treasurer, I got a lot of help from Roy, and but I had been working with him for a little bit in the background, and I think having someone work, say, with Tom, and when we have a new treasurer, then they'll be ready to step in. Also, if the treasurer is not available for any reason and can't attend a meeting, then the assistant would kick in. The other thing is, when I was doing this role, I found that I made a few mistakes, and Roy would invariably catch them. And so having just someone else look at the numbers and so on, I think is a good thing. As far as the secretary, I think there's a bit of work that we need to do going forward in terms of just organizing things and documents and that sort of thing, and having someone to assist with that, I think would be really helpful. So that leads to the last suggestion, which is, I think our Google Drive is becoming a little bit unwieldy, and there's a lot of old files that could be cleared out. We could possibly run out of space, although I think we're okay for the time being. But you know, a solution would be just to do a bit of a fall cleanup, and organize our directory structure, clean up some old files, use some new tools like hyperlinks, color coding, that sort of thing, just to make it easier to find things. So those are sort of 3 suggestions that I have, and if anyone has any feedback, I would appreciate it. That's it. So I will give control back to Tom, I guess, for the. Does anyone want to discuss this now, or we can?
I would prefer
I
to.
wanted to say thank you, Haney. It's very good what you're doing, but I think the problem too we don't have very many small companies,
Right.
and we're mostly cash. We're like 40% cash. How can you expect the portfolio to perform if it's in cash?
No, that's a good point.
Yeah, that's
Kenny,
okay.
I think we need to take that. This is a huge topic, and I don't know if we need to take it offline.
Yeah,
this
we
whole-
probably don't have time to discuss it today, but
Yeah.
I just
Yeah.
I wanted to present it and
Okay. Yeah.
give people.
Yeah.
Yeah,
Let's hold off on our comments, because it's much larger than just
right.
one-on-one feedback.
We could spend the whole time just discussing it.
Exactly.
Well,
Yeah.
all our SSGs are holds today, just to remind people.
Yeah. Well, I have an issue with that too.
Okay.
That we need to be looking at those more closely.
Sure.
And just,
Okay, so I'll present some treasurer's info here. I'm still recycling this manifest selling guidelines. So their idea is to, okay. Thought I did something a little bit different here. So their idea is to look at the quality companies, or hold quality companies in the portfolio. And by their mark standards, which it combines earnings stability, financial strength, relative growth, relative profitability. Most of our stocks are relatively high quality by those that combo methodology, but 3 are down here bringing up the rear: BJ's, Inogen, and Innovative Industrial. And I'm not sure exactly where they lose points. Probably performance and profitability. So, this next one is stocks that are not working out, stocks that have an annualized relative return of negative 20%. So if we're looking at the annualized return here, we've got about all these stocks that are showing red are below 20% below the market. The market gauges I'm using here is the S&P 500 and the Schwab, that SCHB is the broad market index. Those are about 20% positive. So anything below zero is 20% below them. So these are the annualized performance of those of the companies in our portfolio. They're ranked, worst to best. And then this is a three-month ranking. So our companies are doing better, but they're still, the market's still about 20% up, 19 to 20% up on this metric. And so, all the companies below zero or below that. And then here, and the next one is the 1 month. So they're Schwab and or the broad market and the S&P 500 are up 5-6%. So we've still got these three that are, well, they're nothing's 20% below over 1 month. I don't. Well, okay. This is a graph for Inogen, but we didn't buy it too long ago. But it's been maybe it will bounce back, but its share price has gone down dramatically over the last 6 months. So this is here. We're looking at par. So if projected annualized return is I guess less than we could get on cash. He says 1.5 to 2%. Well, I guess, but we should shoot for. We're trying to shoot for things that, so by manifest methodology, the stocks they cover are up by in their universe is 7.5% return, and the sweet spot is 5 to 10% above that, which I think if we're going to look, which is what Haney suggested, we shoot for things like that. So things that would be in the green. So this is our portfolio ranked by manifest par. So I don't know if I agree with his with their valuations here. One thing, like when if you don't change your assumptions, and then the stock price of a company goes down, that increases your potential return. Because the lower the price, if you leave your target price and everything the same, and the stock price goes down dramatically, then your return potential goes up. So, anyway, some of the companies that have had the rockiest past show the highest potential return, which I don't know if that necessarily follows. But anyway, this is what his idea is, and they rated AQN as 0, Walt Disney is 3, BJ's at 5.3. So I made this chart here and ranked it by manifest. I did this as Morningstar. So this was Friday's close for all our stocks, and this is Morningstar fair value, what Morningstar thinks these are worth, using their discount cash flow analysis. Some they do a quantitative methodology, some they have the analysts sort of have their input. And so then I ranked these by price to fair value. So the stocks that they think have the, I guess this would be the highest potential return, have the lowest price per fair value. So if Air Lease gets up to fair value, it'll practically double. And then the HEICO, they say is 30% above fair value. That would be how you look at this chart here. And the ones in the middle here are about, what they consider to be fairly valued. And then I put in the manifest projected return or potential return. And I don't know if there's a correlation or not. I sort of have to laugh. I mean, some of them they don't. It's they just I don't know. They don't. I don't know if there's a correlation or not, but they seem different. Now this next one, this next chart, I ranked by a manifest growth rate, and this is the stocks they think will grow the fastest to the slowest, and then I put in the Morningstar growth rate. Now they didn't have Morningstar growth rate for all the companies, but Morningstar definitely thinks that Disney and Schwab have the lowest potential growth rate. And I will, I can send this if people want to use this just for our, to take a look at the portfolio a little bit different way. I can put this on the drive and send a link to where it is.
Tom, I just, sorry, if you could go back just one couple of slides, one more if you don't mind. So one forward, sorry. Yeah, right here. So you have manifest, the projected annual return for, say, Algonquin is 0. But then on the next slide, the growth rate is 10%. So
well, that's earnings growth.
Oh, earnings growth. Okay.
That's the earnings growth. I assume manifest doesn't say if it's earnings or sales. I assume it's earnings growth.
Right.
And Morningstar says theirs is earnings growth, but I don't know, I don't know manifest methodology. Morningstar, if something is what they consider to be fairly valued, there's still a possibility it isn't overvalued, but
right.
so I don't know how they came up with that 0%.
And Tom, can you tell us a little bit more about manifest investing? Why do you, I mean, they're another analyst, right? Or is it just one person, Mark?
Well,
Roberts?
I guess one person does the whole thing essentially. It's Mark Robertson. He's a longtime NAIC member or BetterInvesting member, and he's then he and these other sort of nationally known people, they communicate with each other. They put on these webinars once a month. And he supposedly he looks at value line and looks at analyst consensus estimates and essentially every time a new value line comes out, he goes over that and he takes all this information together and then sort of does an SSG on each company in each week's value line. So he updates them quarterly. And I mean, sometimes he's not the law. He's just his opinion. But I mean, somebody who works for J.P. Morgan or Morgan Stanley or something. I mean, that's these people. They have their input. They're Bank of America. They get together. These are people who have their opinions about or Morningstar. They're analysts. Or Doug Gerlach. Anybody it's their opinion as to what things are the way they see the world. So so anyway, this is our portfolio performance over the time we've held each stock. And so a couple, like we've held Inogen since June, it's down 9.4%. Qualis, we bought that last month, it's down 10%. CyberArk, we bought that last month, it's down 7.4%. And the market's generally been going up. Lease or at least staying flat to up. So I don't know. This is the story. Air Lease is kind of in a bad industry. For travel. With, all the airline companies. Those, they're.
I would say Air Lease and BJ's and what was the other one? Disney, I think, are they're going to struggle going forward. I think, but that's just my personal opinion.
And I think probably Schwab too.
Schwab, yeah.
Schwab, with the low interest rate. So anyway, this is food for thought.
Who's following Inogen?
Pardon? Oh, who's following it?
Inogen, yeah. Is it Matt? Who is following Inogen? I'm just curious.
I think it's Matt.
Okay.
I thought Matt, he sent something out about Disney.
Yeah.
Yeah, no, I think he switched things around when Piero and
well, possibly, but just within the last week or two, he sent something out about, Disney's lost a lot of money and their stock was up 5%. Go figure. Yeah, that's what I recall that email.
He's got Disney. Inogen is also Matt. He's got two.
Oh, okay.
Yeah.
So nobody's wrong. Okay. So that's I guess. How do I get this thing here?
What's on the meeting agenda, Henny? Who's next present? I can make that person.
Can I just ask Tom a question then?
Sure.
So are you recommending selling then these ones with the negative
Well, these are,
numbers?
it's up to the club. That's what Haney was suggesting, that we examine the portfolio. But I mean, these are stocks that haven't done well for us. Now, if we have confidence that they're good stocks to hold going forward, we might want to keep them. But it's food for thought, and I can't figure out how to escape it. There we go. So I don't know if how much time we have. If you guys want to look at the sectors or whatever that we have stocks in, if that size diversification or sector diversification, I think we sort of probably know that intuitively, but we've got, like Bernard was saying, we've got looks like 33.5% cash. We do have we've got a fair amount of large and mega, but we do have some small and mid-sized companies, and the sector and industry diversification.
Well, I think something that we should sort of discuss at some point is where do we see the economy going forward, and where do we see the market going forward? Because there's certain industries that are going to struggle for the next couple of years. And in addition to that, given the general state of the economy, how are small companies going to going to, behave. So those are things I think we need to give some serious thought to.
Supposedly, just from what in the news, supposedly small companies have the last few weeks have started to come back. So
Also, too, when we project out 5 years. So, to look at a stock and say, well, we bought it last month and it's dropped 10%, we should sell it. It doesn't seem.
No, I agree. But
we could have made a mistake too.
Yeah. But just because it's fallen in 1 month a certain percentage doesn't necessarily mean
right.
that.
Right.
It doesn't make sense to me about the cyber, security area. We made a mistake, during this, especially now everybody working from home, and the company need to have that strong security sense. Plus this we have two cyber security companies. They dropped just about almost the same, about 10%. So since the earnings just came out, so maybe we can learn about what went wrong. Because I was asking John Callison the same thing, like what's going on, these two companies. So yeah, we can definitely review them. I agree with Megumi. It does not make sense that we just hold for a month, then it drop 10%, let's just sell it. We want to understand why.
And we should probably compare them to the industry too. I mean, FireEye or some other big company. If there's other companies in the industry that are doing well and these people are not, we may want to switch horses.
I feel like we do that. I feel like we do all of that when we look at our portfolio. Which sectors do we need? We really wanted something in a small size company. That's why we bought Inogen, and we look at the competitors. So yeah, it would be good to do a deep dive and see where we are going wrong, or maybe there's just things we couldn't have foreseen. I don't know.
Or maybe we needed some patience too.
We can debate that later or now.
All good points. Well, I think we've got a full agenda with all the reports.
Yeah.
So that's it, unless anybody has any questions for me.
Well, I wonder about this quality rating and they give IPR a low quality, then like it goes up 30%.
Yeah.
In the month, and it's projected to. Well, this is one that's Haney's following. I let him talk about it, but I don't see how they give it a low quality just because it's a new company. I guess I don't know. I don't understand how they work. And another thing, I think we paid too much on that cyber stuff. When you go 58 times earnings, that's a high PE, and that's what we bought at.
When we evaluate these software companies, right, you're right, Bernard. So when we look at these IT companies, their PEs were very high, and the trend the same. And I think last month, Joanne's group, they presented the 3 companies all have the same across board. The P's are very high. In general, people just willing to pay more for IT companies for some reason. The investors, they are expensive.
Yeah,
I think they're expensive.
They might be all right long term.
I think they're expensive based on, more perception of what's going to happen in the future and people's assessment of that. So I think, when it comes to technology and innovation, it's anticipation, I guess, it's as opposed to actual valuations, because the valuations don't always make sense. So if you're doing a valuation on Tesla, you'd never buy it. But over the last year, it's done phenomenal. So I think there's some of these disruptor companies, like Tesla, Illumina, Square, they're changing sort of their industry, and it's very difficult to value them using traditional methods. And so you have to, use a different approach. So,
I mean, using a different approach is totally I don't know, better BI principles. So we could allocate a certain percentage of our investments, like I have like what we call Las Vegas, because we can't use our standard tools. I don't use the standard tools. I go by the research that I do. So we can't justify some of the stocks that we purchase because we're not able to do the analysis using our standard tools. But I agree, we could have a portion or designate a portion of our investments to, we don't have to call it Las Vegas, we call it non-standard.
Yeah, and I think you see examples of that, with say somebody like Warren Buffett, where he recently bought gold. He said in the past he'd never buy gold. He bought the airlines, and again in the past he said he would never buy airlines. He bought Apple. It was a technology company. He said he didn't understand technology. So the point is, times change, and we kind of have to change with them and look at the recent data. So there is room for value investing, but then there's also a lot of disruptor companies out there that are doing some very new and innovative things, and you can't evaluate them using the same methodology. So as a learning club, I think I agree, Joanne, it would make sense to sort of spend some of our portfolio looking at those things. And we've done that in the past.
Does anyone know if he holds Tesla?
I don't know if he does or not, but I think he only is required to.
Well, not unless he bought it in very recently, because I think like August 15th, all the companies had to report what their holdings were. I don't know the number of the report, and it wasn't. If Buffett held Tesla, it would have made the news.
Yeah.
Okay. I don't have the agenda in front of me, but Joanne, do you have it, or?
Yeah. The next we have up is okay. So next month's stock study group is Matt, Hanny, Mina, and Gabe. Just FYI. And the next section we have is just we don't have a stock study for this month, but we will be going through our PERT and annual reports, and we'll start out with Tom with Air Lease. Oh, wait, sorry. We'll start out with Megumi with Facebook.
Right.
She has a note from her mother.
She does? I didn't see it. I didn't see the note.
Now
I forged it. I forged it. Something I would do when I was a kid.
I can't see the screen.
Oh,
what? Tom?
I'll
make up.
No,
because my own screen.
We haven't. Okay.
Oh, sorry. I'm in a Maguni presenter. Is that okay?
Yeah.
Yeah.
Okay.
So should I do I show the PERT?
Show your mom's note. We want to see that.
Yeah, go through the quarterly, and then Did you make any changes?
Well, so what happened was between the time I made the initial report and the weekend, it turned into a buy.
Oh, okay. Just go through it. Just listen.
Well, but we need to switch presenters.
Yeah, I need to bring up my.
She just needs to accept it.
Right.
My computer's spinning. So.
Probably it's in your background, Megumi. Yours.
No, my internet's.
Do you want me to bring it up? I can
Yeah,
bring it up.
can you?
Yeah.
Okay.
Hold on a second.
Okay, so I'm going to join and make you presenter.
Okay, let's see. Hold on a second.
Yeah, sorry, my internet's been slowing down in the evenings a bunch,
Okay.
even though I
You
have
have a
Comcast.
Comcast? Ah,
Yeah,
that makes
yeah.
My
sense.
Xfinity was down most of yesterday and this morning. I had to go in the office.
Uh,
Well, let's hope we don't have a blackout.
I
Right.
know. I
Yeah.
was afraid of that. Okay, so
Excuse me, Join. Could you make it just slightly bigger? Because I know you have a large monitor. Yeah, there you go. Better. Yes.
okay, so this is Facebook's second quarter 2020, and they've sort of proved themselves to be able to perform through the pandemic, as far as I can tell. At the onset of the shelter-in-place restrictions, of course, ad revenue and total revenue went down, but then it bounced right back up in the next 2 months, and overall revenue was up 12%. They've had their largest hiring quarter ever, and they're continuing to invest in their technology, AR, and I can't remember, is it virtual reality and artificial intelligence? And it seems to me, and I don't have Facebook, and I'm not exactly a fan, but they seem to be, trying to stay ahead of the negative press they're receiving on fake news and all that stuff. So as far as the so let's see, I'll go through this form for growth projections. Last quarter, I had picked 10%. And because we had discussed, being a little more optimistic once we have held a stock for a while, I went with 15, which is still lower than the analyst projections. And then the EPS growth projection, I picked 12. And that came out to 2.6 to 1, which was a hold based on the price.
I have a question.
Yeah.
Why is the most recent quarter EPS growth 97.8% much higher than the trailing 4 quarters of 38.8%? Do you know? I mean,
I don't know.
I can see the sales going down because of the whole pandemic thing, but having their earnings per share growth go up almost 100%. I'm curious how they are doing that.
Maybe later we can take a look at the graph,
Okay.
the trend,
Okay.
and see what's going on. Why? Yeah.
Okay. So anyway, the upside downside ratio came out to 2.6 to 1, which was a hold. And based on Facebook being almost 10% of our portfolio and large companies being about 30% of our portfolio, would be another reason to not buy anymore, even though the price went down by $7 and that switched it to a buy a week later. So, and all the, NASDAQ, MarketWatch, CNN, a week ago were a buy or a strong buy was their recommendation for Facebook. As far as risks, the primary risk I think would be government stepping in and placing regulatory sort of pressure on Facebook, but who knows? I assume we will see that coming. The ban on TikTok is still up in the air, and therefore the merger with Microsoft and TikTok, we still don't know, but I'm sure we'll have time to react to that as well. Let's see what else. Facebook is saying going forward, they anticipate that the DAU, the daily users and monthly users will level off as shelter-in-place restrictions ease up. But, you know, come fall, who knows what'll happen? It just seems to me they're in a very strong position overall, no matter what happens.
Do you want to look at the SSG?
Sure.
Okay. Which one is it? This one?
Yeah.
Yeah, their graph looks nice.
Yeah.
So maybe the working from home has helped them.
Well, it's helped.
What do you mean?
It helped with their what is it? Expenses.
Operating cost?
Operating. Yeah, it was down, I think, 11%. But would that change the earnings by that much?
Oh, there was some, like, if you look at that graph, there looks like there was some extraordinary event there. The pre-tax profit sales were steady, but pre-tax profit and EPS took this big dip right here. So that's why you got that 100% change.
Oh, okay. So I see.
So we got some unusual event. I don't know what it was, but
Well, the taxes maybe.
In 2019.
I think that was
Well,
the regular.
yeah.
Didn't they have some sort
Yeah.
of
well, they had an ad boycott, but you know that was only for a little while, and that was just
Well,
recent.
didn't they have a
okay, so,
lawsuit or something, or had to
yeah,
pay a fine?
they did. So I guess the part I didn't understand was they did pay that $5 billion fee, and it was assessed at one point, but then paid at another point. So I don't know what that means. It showed it was in the 2019 books, but then they actually paid it out later. So maybe that's something I need to look into.
And aren't they talking about doing some kind of stock split? Was it 4-to-1?
That was Apple.
Apple is split.
Apple and
I haven't
Apple.
heard anything.
Apple.
Yeah.
Okay. Not okay.
So that charge was in 2019. So that's what that is, the 5 billion. Even though they paid it later because they recognized it, you know, it was assessed in 2019. So that's when it would show up on the books, if you will.
Okay, so it wouldn't affect the high earnings for this quarter, or was it the trailing 4 quarters or the?
Well, it
Well,
goes
it would
like,
just explain the
year
dip from
over year. So I'm looking, if you bring up the quarterly data, you can take a look at it.
Okay, yeah, let's see quarterly. Oh, it's a bit
By the
small.
way, welcome, Matt. Did you bring a note for being late?
It's in the mail with where my dog ate it.
Yeah, it's in the lunchbox.
Their pre-tax profit was at, you know, negative percentages here in the June, March and June of 19.
So, okay.
So I guess that's where I don't know if they would pay out a fine over 2 quarters, but that's looks like.
Oh, so then that's why the big, okay.
So that's why their EPS and pre-tax profit, that was the dip. Now we don't know where that money went, but that's when they reported it.
So March 19th. I guess I can look that up, huh? On their 10K from last year.
Or the quarter, yes.
Okay, that will be a good exercise for me.
So do you change the you didn't change, or you did change the estimated growth, right?
She changed it from 10 to 15.
To 15
from
to 12.
From last quarter. Yeah.
Yeah. Okay.
Yeah, and it was a hold.
How much
Then
Facebook do we have percentage-wise, Tom? Do you know?
9.7.
Okay, we have about 10%.
Yeah.
100% too much.
Mm. I know.
That wasn't the percent that you meant? No? Sorry.
Okay.
Well, yeah.
So
Well, at
your
least
recommendation is a hold?
Oh,
Yeah,
Okay.
it is.
stronghold. Okay.
That's very good, Magooby. So,
Thank you.
you know, one time what I did, average stock, I did Facebook, and I looked at the average value of the stock for the last 5 years, and I computed the compound annual growth rate. It came out to 20%. 20% annual growth rate. That's remarkable for a public company. So I don't know about the future, but I think it's good. But the past, Facebook has really performed.
Now, am I supposed to be the presenter? I've got something here that,
Yes.
Elise,
Air lease.
you are next.
no, it's
Tom
Tom
Loftus.
Hill.
Oh,
Oh, Tom
Tom of,
Loftus.
oh, okay, sorry. Okay,
I
Mr.
just
Tom.
noted.
Okay, show my
Yeah,
screen.
Jean has comment.
Yeah, I just noticed. I think I track Facebook. I think in 2019 quarter two, they paid
Mhm.
2
Yeah.
billion legal fee, and also in 2019 quarter one, they paid 3 billion legal fee to FTC, Free Trade Commission. So that's why they have a earning dip in that two quarters.
Mm.
Oh, it was 2 separate fines? Okay, that makes sense.
Yeah.
Totaling 5 billion. Okay.
5 billion paid
Okay.
to FTC in quarter one, quarter two, 2019. So we don't have to check. It's already there.
Great. Thank you.
Welcome.
Okay, so we'll talk about Airless.
Bernard, sure. Bernard, just to your point, since December, I think, of 2012, I was just looking it up online here. Facebook has been growing at a compound annual growth rate of 30.3% over since that's what 8 years. So that's pretty good. So
Thanks, Amy.
Okay, so we talk about
I'm gonna
Airless now?
have to dig it up. I don't.
Okay.
If somebody will bring it up, I'll do it. I don't have my internet's not real good. I can't very well get those Google files.
We're looking
My
at.
internet's not very good. I hope somebody.
We're looking at Tom's screen, Elise.
Oh,
It's not your
there
turn
it
yet.
is. Okay.
Okay, go ahead, Tom. Sorry.
Okay. So Airlease, so this is stock that Tom talked about in, and I guess we'd have to say is potentially undervalued, or the market. I guess they're a great company in a industry that's really struggling. So as far as projecting ahead, when it was analyzed last month, they used 0. I used 3.9 based on some of Garlock's ideas on how to project, given what analysts thought the next couple of quarters were going to do, and I got
So
3.9.
I have a question. How was
Sure.
the 0% sales and EPS growth? How is it 0?
Well, that's what was used to project it last month, or the last time it was analyzed for the first quarter.
The last SSG. So yeah. So you didn't do that?
I used
Or did,
3.9.
but did you do the last SSG? The 0%?
No. I forget who did it. If Matt did it with somebody else. He may
Yeah,
remember who
that's
did it.
what I did.
So Matt, do you know why you used 0%?
Yeah, because we were just looking at, we kind of did it backwards because there was no I mean, how could we know, right? We still don't really know what's going on in the airline industry. So we just said if there's zero growth, if we think we can get back to like where we are today in 5 years, what price did that justify? And it was in the buy range, which is why we kind of just left it at zero. But it's since gone up, so now we're kind of having to guess what we think it might actually grow at, which
I
is
remember
tougher
right. We made assumption. I think Matt made assumption. Just this industry, just say if they don't have any growth at all, what is going to happen? I think
It was
we
still
right. We also put the limit order on air lease, but the price never dropped to that. I don't remember exact price, but I don't hear anything from Tom.
I thought that when we own the stock that we're supposed to approach it with a more optimistic view versus pessimistic.
Right, but last quarter was lockdown just started. This industry
Okay.
just went south.
Yeah.
So
Okay.
that was
I mean,
what
air
happened.
traffic was down 90%, you know, so it's tough to
right.
project
if we
growth,
talk about,
you know.
if we talk about you know, even what they're projecting, like the Air Transport Association saying that reported passenger traffic fell 58% year over year for the first 6 months of 2020 or 2020, and then 86.5% year over year for the month of June, primarily due to COVID. They don't expect this to pick up that much, like 62% of 2020 in 2021. So we're going to have these low passenger rates in the future. As far as they've actually had a reasonable quarter. They 59% of their leases were negotiated. The collection rates were 91% for the second quarter versus 90% in the first quarter, and they a lot of the, if we go down here and talk about it, they talk about how many leases, but most of the leases were either deferred or they got their money back within the year. They were promised their money back within a year, but they did defer 189 million in lease payments. They say it will impact on their cash flow. So they seem to be in a good position. It's just how long this is going to last.
Tom?
Yep.
Can I ask a question? See where it says T4QS, trailing 4 quarters?
Yeah.
So I think the one on the left should say most recent quarter, MRQ.
Okay, right. Sorry.
Is that right? Is that right?
Yeah, right.
Okay. So it looks like they're, yeah. Their sales
the
are
one on the
okay.
left is most recent quarter, right?
Right, the left and most recent quarter. Tom, can you make a change? MSQ, most, or MRQ, most recent quarter.
Left. The left
column.
It's over here.
right there.
There
Right
you
there.
go, yes.
Yeah. Just say MR.
MRQ or MR.
Yeah, perfect.
Okay, so if we just go through some more of this, the other thing about the company is they anticipate that these airlines are going to want to fly very, carbon free and efficient airlines, and they have a new fleet that they think that whenever they start flying, they'll want to lease their planes. They have planes to lease that won't cost them so much money. They won't have to buy the planes, these new planes. They'll be able to lease them and it'll look more attractive because they're going to need their money to get themselves going again, and they won't have money to buy new planes. So the other thing is right now they own 301 planes and they manage 89 for others, and they have 393 planes on order. another factor for them was these 737 Maxes. They've got $6 billion on the books to buy them, but that's getting pushed back. So this gives them some, additional liquidity that they can use to get themselves through this pandemic. So with the current P of 5.19, this is due to the and the other factor here too is that there's supposed to be 25 billion aid to the industry, and I didn't see anywhere exactly who's going to get it or what they're going to do with it, but that is another positive for the industry. So when I do this, it's only comes out with an upside down ratio of 1.8 to 1 and compound of 14.6 using 3.9, and I can show you the
Did we miss?
Did I lose audio?
Nope. I
Where,
lost
Tom,
it.
Just Tom.
Tom, do you want me to try to get it?
Uh-oh, maybe Canada
He's
has
frozen.
storm. He's frozen.
Frozen.
Is he still
Hero
connected?
Yeah, he is. Oh, nope, he's
You
offline.
think Trump did something to Canada?
Yeah, because Piero telling me that when they have a storm, at least where he lives, he said they will just have a blackout.
Yeah, we have a snowstorm right now.
Seriously?
No, of course not.
I take everything seriously.
Bring it to California.
Right,
Yeah.
we have a heat wave.
No, I think there's some thunderstorm activity in his area. So
Do you want to give me the screen, Jay,
Yes.
and then I can we can look quickly at his SSG.
Okay.
Is he on the line or not on the line?
He is backing. No, he's off. Not yet. He just, yeah.
Okay.
So Tom Jones. Tom, do you remember the price we set to buy Air Lease, the limit price?
You mean originally?
No,
Oh,
I
no,
can look it up.
Okay.
I'll look it up.
Okay. Oh,
It was
Tom
like
is back.
low 20s,
Tom
I want
Lucas
to
is
say
back.
22 or something.
Tom, I brought up your SSG.
Yep.
Okay. So it looks like the price has dropped from its high. Oh, must be
Went
what
up. Yeah.
Tom bought it was down here. Tom Jones
$8,
bought it.
$8 a share, something like that, Tom. It did not
Yeah.
send us
Yeah,
a memo.
I bought some there. I sold half my position.
Oh, wow.
I'm still hanging on to some, but hoping for the best.
Mm-hmm. Eventually, everybody will travel, right? That's what I think. What I hope.
I think these guys will be in decent shape when it starts to come back because airlines will kind of use them to fill in, new routes and so forth. I think I read before. So instead of buying a whole new plane to fly, a route that may not pan out.
The limit orders were $1,000 at 18 per share and $1,000 at $20 per share. So it's
wow.
definitely
Right now
above
it's
that.
what? 35, 30.
Well, but there's a whole lot of planes out there too. The big airlines parked a lot of planes. I don't know if they're going to reactivate them or get new planes or whatever, but they took a lot of planes out of service. So I don't know what the demand's going to be short term.
And there's about 30 airlines that went bankrupt too, so or are in bankruptcy discussions.
So your recommendation is hold or sell?
Well, I was saying a hold,
Okay.
but I guess this is one that you would anticipate that it's going to come out okay. they anticipate they will have some struggles in the third quarter again with payment, but they look good so far.
So hang on to it for a while.
Yeah.
Oops. Okay.
One analysis that we might want to do at some point is look at how much it's dropped and then how much it needs to grow to kind of get back to normal or even. And then if we wanted to beat the market by a certain percent, how much does it have to grow to get to that point? And is that realistic?
And when you mean how much it's dropped, you mean in stock price or what?
Yeah, so based on what we bought it at, and I think we bought it a long time ago, so we may not be in a that bad off. But so if it dropped, say, by 50% in terms of price over a certain time period, how much does it have to go up by for us to recover that, plus whatever target we set that we want to make every year or what have you. So say we want to beat the market by 5%, then it would have to come back to its normal price and then grow by 25% or whatever it is, to get back to normal. So it may not be possible to ever catch up.
You may want to ask Tom about what we did buy it for, because what I remember looking at today was it's underwater right now, not by a lot, but a few $100.
Tom? Well, let's see. We're down. I guess we're down 13.5%.
Okay.
I don't know. It looks like the dollar amount that we own is 1760. I guess we probably purchased about total cost is 2,034 according to
Yeah,
this.
and we bought it in January of 2019. So
yeah, I don't know if we bought it in two lots or just bought it in one, but right, January of 19. So
that was the first purchase.
So if we're down
Really?
13.5%, it probably needs to go up something like maybe around 20% to make us even.
Yeah.
Oh, Tom.
Yes.
Can I ask a question? Debt to capital. You go down a little bit. Debt to capital, 70%. That's a lot of debt. So when you have debt of about 70% to your debt to capital of 70%, it's a lot of debt. Did you check on the interest coverage?
Yeah, these guys they have a lot of debt because they're buying aircraft.
Yeah.
And so in that industry, that's
standard.
normal. Yeah.
Yeah. Okay. But if they cannot meet their debt payments, if they cannot cover their interest payments on their debt, the debt holders will call in their debt. But if you can meet the interest payments on the debt holders are happy. They'll say, well, as long as you pay the interest on the debt, that's okay. Can they cover their interest?
Well, I don't think we can pull up the value line and get an idea about that. But I don't think that they're in bad shape at all. They're a pretty strong company financially.
Right. They're doing a lot of adjusting. Like they've got a lot of a good rating too. Like their bonds are very high rated.
Well, at least they're investment grade. They're not junk.
Yeah.
Okay.
So Tom, actually, you presented the Air Lease back July 2016. We probably bought back then. It was about $30 a share. 2016. So probably we bought a couple of times already. Because I'm looking at a stock study folder.
So
Okay.
Tom, where's
It
the
said in
interest?
in iClub, Jay, it says that the first purchase was in January of 2019, unless we didn't transfer that to iClub.
Oh, from Morningstar?
Yeah, it might have missed that.
Well, I'm sorry. I think the ones that have the interest and debt and stuff like that, the companies that are in the regular edition of Value Line, that shows. But this Value Line is in the small company edition or something. It's in the expanded edition. It doesn't get the full treatment.
Okay.
So I can tell you their interest expense is what, $112 billion or $112 million on
What's
total
expense?
revenues 521 million. And 112 is their interest expense. That's about all the expense they have. They don't have very many people, and that's depreciation and interest is about all the expenses they have.
Are they now the medium-sized company or still small? Because I remember when we bought was a small company. What's the size right now? The
I
sales?
think they're medium.
Medium. Okay, they have grown.
Yeah, I think our only small is Qualys, Inogen, and CyberArk.
I'm just looking at, I'm trying to bring up some of their financials here, but I noticed that their executive vice president and managing director of Asia is Jay Chen.
Really?
Is there something that you guys are not telling us?
Yeah. Possibility.
What's going on? You
I
need to
was saying,
declare.
help this company.
You need to declare.
Transparency.
Transparency. Yeah. Inside trading. I cannot. I have no comments.
It's Jay Chen. So Jane and Jay are.
They're triplets, actually. They have a third sister.
Okay, so that one's a hold. So should we move on to Bernard?
So could I add one more comment?
Oh, sure.
I think the opening comments by Hanny, where he suggested, is it the right thing to be holding these value companies? Disney, all Air Lease. Is that the right thing to be doing? Is sort of a valid question, and you may want to throw. I would throw it into that committee or team to resolve this, because you're going to be sitting like this. Nobody really knows what's over the horizon on this company.
The way BI principles work is that we should be identifying growth companies. So some of the companies that we hold on to transfer into being more of a value company than a growth, but we really should be focusing on growth. So yeah, I guess once it starts, becomes a value type holding, then we should probably be reassessing. So
Yeah,
I don't know.
well, that's another way to look at it. If you think it's gone to a value position, then you don't want to hold it, whatever reason. Look for
because it's not working. Our money isn't working for us.
Right. Yeah. Another thought I have, just based on Hanny's suggestion about, we maybe also plug into technical analysis just to have like second check how, from different angle to see if this company can perform better.
Okay.
Worth for us to hold. So have a committee to work on that. It's a good idea, actually.
I typed into, just a quick point here, I typed in interest coverage on Google, and I brought up Guru Focus, and according to them, their interest coverage is 2.75 right now, which, I mean, they can cover it almost 3 times. It has been up to 3.5 in the past, which they say is pretty low. They would prefer it to be something like 5, but they're not in danger of going broke tomorrow.
I think in that kind of interest coverage ratio in a time like this is pretty solid.
Yeah.
And they're a solid, well-managed company. I mean, they know what they're doing. They just have been dealt a bad blow here by circumstances. The max plus COVID has hit that industry pretty bad.
Okay, are we ready to move on to Bernard?
Yes.
Okay.
Is Bernard going to present her, or Joanne, you are going to?
Oh, sorry. Do you want me to bring up Bernard's?
I don't know. Bernard was saying his internet was slow. I don't know the plan.
You know, I think we're running short on time
I can't
here.
bring any of it up.
Oh, we need to
We've
chop
got a lot of agenda
Oh,
left.
yeah.
I think
So what do you
we
want
just end when the time is up, Tom. Since everybody put hold, there's nobody that has to present.
Does anybody want to present?
I would like to hear about Inogene, because we noticed during Tom's presentation, Inogene did not perform well. I'm just curious.
Okay.
Also, there's Qualis too.
Look,
Are you okay, Bernard, if we move forward to the stocks that
I
aren't
wanted
doing
to do
well?
Comcast. I mean, I did the work.
Okay. Well, okay, let's do Bernard's Comcast, then we'll move on to Inogen. Okay, do you want me to bring it up, Bernard?
Okay. Yeah. Yes, please, because yes.
Okay, Bernard, go ahead.
Okay, so this company has been hit hard by the COVID-19, and so that's why I expect that usually, like the last time I did a SSG, I expected a 6% growth. Now I'm expecting a 4% growth. They had to close their stores in the United States. They can't service because people come in and get sick, and their employees get sick, and of course also the revenue's down because of no sports, and so this company has really been hit hard by the COVID-19. But I think I can't navigate, but I think that they're going to next year they will do better, because again they will be able to, they will have the Olympic events, they will have sports events, and I think things will be better in the United States and in Europe once the COVID is over, which I think next year we'll start seeing recovery from COVID. Anyhow, I think it's a good company that we could hold it and see what we think next year.
Bernard,
because they're expecting still. Go ahead.
How is the Peacock?
I'm sorry, what you want?
How is Peacock performing? Their streaming service.
Well, it's just getting started. Yes, it's just getting started. What I understand, they have 3 levels of Peacock. First level is free.
Oh.
So actually, I'm probably even getting it when I watch MSNBC but they're anticipating eventually they would charge for premium content. But it's kind of hard to know because it's just getting started. But this is the largest television company in the world, and they have a lot of broadband internet through Comcast. I'm not sure how much broadband they have in Europe. I want to do the research on that to see if they're just using satellite dishes or if they have some sort of cable. I'm not sure how they do it in Sky, but in the United States, they do pretty good internet service and pretty good streaming. So I think this here
So
Peacock will do
Bernard,
well.
Bernard, Just
yes,
to add to your point. So I used to travel to the UK a lot, and Sky is very pervasive there. They have the Premier League soccer, the Champions League, and so everybody in the UK that wants to watch soccer gets Sky. So it's similar here to some of the networks, the major networks here. So I think they have pretty good coverage in Europe. Good subscriber base in Europe. I don't know about the other two.
Now, but okay, Haley now, and I noticed what they say, they're expanding from the UK, from England into Italy and other countries. There's Sky already, but it's growing into these other European countries. Now, what my question would be, and maybe you know this too, Haney, if you subscribe to Sky in the UK, is it connected by cable or is it just a satellite dish? Do you know
It's
that?
mostly, yeah, in the big cities, it's pretty much cable. In London and
Cable. Oh, okay.
yeah, it's cable.
So you're
So
recommending
that's
a
a real
hold on this?
advantage for inter.
The reason I know that is
I'm recommending a hold, but that's a.
the reason I know that is because my daughter
Go
went
ahead.
to school in the UK, so I had to go and pay her cable bill.
Oh, okay. Good for you, though. Good for you. So, yeah, I think it's a hold. I think they're coming back, and they've had a hard time, but I think they're doing well. And by the way, though, having that cable in other places like Sky, that's an advantage for internet speed because you can have like 100 megasecond as compared to the satellite dish, maybe 20 megasecond. It helps a lot if you have a cable connection. That's my opinion. So that's a plus too. So
Yeah,
I think it's a
I think
hold.
they're adding. They
I
seem to
think
be. Sorry, Bernard. Go ahead.
Go ahead.
I was just gonna say, like
Go ahead, Henny. But
there's a lot of competition in the streaming sector, but the fact that they have high-speed internet, I think, gives them an edge because that's a revenue source that maybe some of their other competitors don't have.
yes, and as far as Peacock, I've seen 2 great movies already. Comcast makes great movies. They had this movie recently directed by Jon Stewart, Irresistible, and starring that same guy that's was in oh boy, I can't remember his name, but it's a great movie directed by Jon Stewart with oh, I forget the damn star, but Steve Carell as the star and several other leading actors, and plus another movie they did earlier, Comcast did, The Dark Waters. And I saw that movie in a theater, and the people applauded after the movie, which you don't see that very often. Dark Waters, that was a Comcast movie. So they can make original stuff, maybe not as much as Netflix, but I think it's a very talented company, and I think it's a hold. So that's pretty much my report. If you want to read the details, I worked on it. By the way, though, this is I've been doing this for 2 years. My first report was in 2000, second quarter in 2018. So I've been covering this stock 2 years. I'll cover it a little bit more, but I think eventually the rules are that after 2 years, somebody else should cover it. But I'll sit by on and cover it until we get somebody else that wants to. But anyhow, it's a hold, and that's kind of my report. And thank you very much.
Okay.
Any
Thank you,
questions?
Bernard.
I'll try to
Thanks,
answer.
Bernard.
Haney, you helped me a lot, Haney, because you filled in the spot I didn't know. Thank
Okay.
you.
You're
Let's see.
welcome anytime.
Thank you, Bernard. Let's do Inogen next. Matt, do you want to take the screen?
Sure.
Or do you want me to sign it to you?
I already did.
Oh, you already did. Okay.
Got it here. You see it?
Mm-hmm.
Oops, I forgot to update this. You can tell where I stole this one from. I think we closed today at like $32 or something like that. So that's where we're at today. Oops, didn't get that one either. Anyway, Inogen. So yeah, the SSG, I just left it alone from the original study since it was only what, a month or 2 months ago now. Because I didn't really have a good idea kind of going forward, and they didn't have a forecast either, and we didn't have an analyst estimate that I could find through BI or Morningstar or anyone like that. So I just kind of left it. But that being said, we can talk more about that, and I'll probably update it, next quarter. So current results, the most recent quarter was pretty bad. It incorporates April, May, and June. So sales growth was off 30% or 29% total due to COVID-related items, and then that drop in revenue resulted in about 74% decreases in both pre-tax profit and earnings per share growth. So for the trailing 4 quarters, it's pretty bad for EPS and pre-tax profit at around minus 80%. But sales are still holding on over 4 quarters about minus 11 only. So current PE is 106.6, mainly due to the earnings dropping so much. Average 83, so it's a little overvalued based on the relative PE at 127%. But I will say with the upside downside ratio, it's 13.7 to 1 with a 12.5% growth. So that's what we need to talk about. Let me flip over to SSG real quick. So you can see here, like here's the 12.5% that we're projecting for EPS, right? So to get 12.5% from annual is where we were. We're going to have to grow these. So we kind of know what these two are, right? So to get to 12 plus 12.5%, the ones in year 21, 22, 23, 24 are going to have to be, farther above the line.
So Matt, the sales went down a little bit, but earnings and pre-tax profit and earnings per share went down so dramatically. Can you?
Right. There was a reason. Piero, you can explain. There was a supply chain issue back then.
That's right.
Is that what it was originally?
Yes.
That's right. Because the supply issue was in Texas and in California. So the COVID-19 upshoot or big increases now are in southern part of the United States, Texas, California. And that's where their production facilities are. But if you look at Inogen, look at their current ratio is almost 6. They can pay 6 times the interest on their debt, which they don't have. And their quick ratio is 5. Whereas in the previous company, Comcast, their current ratio is below 1, and their quick ratio is below 1. They're living, surviving by the skin of their teeth. They cannot make their interest payments. Comcast. So if Comcast is really dependent upon.
I kind of object to that just a little bit as an aside. I think they're okay.
Okay. But it's not the same with Inogen. Inogen can meet their debt. They can just sit there and wait. When it comes back, their oxygen concentrators are for people who want to be mobile. Well, they're telling us to shelter in place. Do not be mobile now. So of course their sales are going down because we're not supposed to be traveling. The cruise liners, they're all shut down. When you want to travel, you want to go on a plane, you want to go on a cruise ship, you want to go out. They're telling us not to do that. But they have all this money that they're sitting on, so they can sit it out. As long as they're the best at what they do, when it eventually comes back, and it does, their price is going to go sky high.
They are, one of the things for their sales team is that they do direct sale. And so, Piero, you just mentioned that they don't travel. I'm just curious about during this COVID, I was thinking if the supply thing got fixed, I envision the sales earnings will go up. That's what I would like to hear about. What went wrong?
The reason for the drop this quarter was people weren't going to the doctor. That's what they said. If people don't go to the doctor, people don't get prescribed these machines. Therefore, their sales have dropped significantly during COVID. So that's what they're saying, at least for the most recent quarter, what the reasoning was behind the drop. I think Tom Jones' point was we've only seen a 10% drop, like right here in sales, but the earnings have dropped significantly. And I can't say for certain, Tom, but I would just say it's the marginal, you know, since they're losing those kind of marginal units that they're selling, you know, all the fixed costs stay, but the variable costs are the ones that you're losing. So, you know, the variable costs are probably pretty low. Yeah, that's my guess, but I didn't look into it super close.
Do people, well, of course, old people use these primarily. And do people use these all the time or just when they travel?
It should be all the time.
Well, the light ones, when they travel, but the larger one, the Wave, what is it, the Wave 6 or the Tidal, the large units, they could use that when they're stationary all the time.
For example, one day last month, I would do oil change, and in the Toyota, I sit there. There was 2 patients that have oxygen on, but they are mobile, right? That's considered as travel, right? Just meaning that you can carry with you oxygen.
Yeah.
Yeah, I think over the long term, I mean, they're kind of optimistic. You know, respiratory disease, you know, theoretically, you would sell more breathing machines down the line, but it just might take a few years for those to kick in, which I think is kind of what needs updated. So this is showing 12.5% here, right? But we know this first year is going to come in probably negative something, negative 20, 30% earnings. So to hit this 12.5%, I just kind of laid it out here. So say we come in negative 50, we're at negative 80 right now earnings. In order to hit our 12.5%, which you have right here, so this is our estimate essentially, right? In the next 4 years, Inogen's going to have to grow their earnings 28% from today. So basically, do we think they're going to be able to hit 28% growth over the next 4 years? And I don't know, I guess. So that's kind of for next quarter. Oops.
That's compound, right? They got hit 28% and then compound that and then compound it and compound it.
Exactly. So this 28% is on top of that 28%.
Right,
this 28% is on top of that one. And that's just to hit a 12.4% because we're starting so negative out here, right? So when you update that, so say we don't think that's possible, right? So let's go back here again. So say we think it's, I don't know, 15. That gets us to a 5-year average of only 2 because it's so negative this year. So if we plug that in 2% to our earnings growth here, 2, it drops into the hold range. But that's the part we don't know. So we don't have any really good insight right now into what these are going to come back. I think they're going to come back, but I don't know if it's 28% per year or if it's 15% per year. So I think we just kind of need to watch right now. The good news is even at 2%, we should still hold it. So it's not like it's a sell right away or anything like that.
What was the last 5 years?
Matt, would you then say to compensate for that, would you buy more? And so when it goes up, you're going to have, it's going to balance out because you're starting from a pretty low price.
Yeah, I mean, that's definitely a good thought, right? But like how much is it going to grow, right? Because even at 15%, which is awesome, like we would be really happy if we bought a company that today was going to grow 15% per year. It's still only a 2%, which is kind of putting us in the still in the hold range, right? Just because the price is so high
He's
right
crazy.
now.
Look at that.
106 price to earnings, right?
Oh.
No, could this stock
So,
be
but if
what
we
they
think it's going
call
to grow
a
20%, you know, maybe we'll that would be better, right? And that gets us to a 6% 5-year average.
Could this be a value trap? I mean, the price is down. It was, stock was really high. It's, you know, but could it be what they call a value trap?
That's a good point. I don't know.
What's
I
that
forget
mean?
that presentation.
What does that mean,
Matt,
Tom?
your
What?
analysis.
So
Sorry, your
Well-
analysis about with the spreadsheet is, I mean, assume that you're, you know, that you're buying it today, right?
Right.
So you don't have the negative 50.
Yeah. So we would like go back here basically, right? And do it from the
yes.
quarter. Yep.
Yeah.
And now put our 12.5.
Yeah.
Yep. We do that. It gets us invalid.
Oh, yeah.
So there's some more work we got to do. I mean, it's kind of weird right now. Yeah. So this is a speculative one. I mean, with it being such a small company, you know, because their earnings are so
I have a
negative.
question.
Uh-huh.
I have a question. I can't understand it because they give you oxygen. Why isn't it being involved in treatment for coronavirus? It's better than probably than some of these machines that they put you on, put a tube down your throat. It's just fly oxygen to people. It might help people, help treat people with coronavirus. I don't know, but that's a question I wanted to ask.
Yeah.
Well, this is more for in-home and travel use. You know, this isn't. They don't use these in hospitals.
Yeah,
Yeah.
and I
These are for
think
people that can
that
still breathe, I guess. Is
the ventilators for coronavirus are breathing like machines, and then these ones are like portable oxygen that provide you with oxygen.
So Matt, you have been tracking this company. What do you think the future prospect for this company?
I mean, I've only been tracking them for a couple of days, but I mean, I would say generally, you know, people are getting older and people are going to have a tougher time breathing in America. So I think that they would sell more, not less. But again, I mean, looking at the chart, it doesn't look good, right?
Yeah, but I'm looking at the value line. They don't have any debt, and the company, the price is really low. And if the prospect is good, then if we buy in now, then the potential appreciation will be high. And you don't take a 50% negative in the year one because we are buying brand new, and you do not consider the previous loss we have incurred because it's a brand new purchase now.
Right.
Yeah.
That was just based on you know, how we were doing it from the annual and from the quarter.
Yeah. I think we should treat this purchase as a brand new purchase. Shouldn't be affected by the previous, as long as you think this is a good company to purchase.
Yeah, no, I see what you're saying. I think it's just projecting this line out here, and then we don't really know. And basically, it's not working over here, right? Because there's not enough earnings to justify any price, even at a 12.5% growth. So if we plug in, I don't know, say 25, right, from the most recent quarter, we get to a sell.
What about just
Also the PE, because also the
what
PE
about a
you only
hold?
use 35.
Yeah, your average high
Right.
PE.
Yeah.
And the low and the high PE are very wonky. We're at 35, which is the original, and 30. So we can plug in 100 up here, which is what it's at now.
That's too much, I think. 92. No, 30 to 1, that's too much. The upside
Right.
down ratio, yeah, that's too much. Yeah.
So this is a strange one, to say the
Right.
least. Put this at 50. I've not seen one like this before, so I don't know. I think we got to follow it a little bit longer. So that's why it's a hold for me. Just learning about this company, what its prospects are.
Yeah, hold.
To hold.
Mm-hmm. Yeah.
Yeah.
Hold a little bit longer because we just bought it for 2 months.
Yeah, so I don't think there's anything to tell them we should definitely sell it or definitely buy more, but definitely hold and watch. That's all. That's all I've got for Inogen.
Okay. Thank you.
Okay, thank you.
No problem.
Okay. Who's doing the Qualis?
Should we do motions? I think we're almost at time, right?
Qualis the Jane? Okay.
Yeah, I was
Seven-
doing calls.
Okay.
The 7:30 is our time.
Okay.
Right?
Yeah.
So we've got 20 minutes.
Yes.
Okay.
Yeah. What's going on with the Qualis? What price do we buy Qualis at? Can't remember.
I think we purchased at the $114
Okay. Okay. So that's why
last
we're down
month.
10%.
Yeah, we
Okay.
purchased.
Mm.
Yeah. And okay, Qualis. I think since we purchased it, it has declined for about 10%. But I still think it's a good company because it has been investing a lot in its platform. And this is a company that's different from other cyber security company. It's not just dealing with a particular segment. It's dealing with the whole platform. And it has been investing a lot. And so the revenue has declined for about 7 quarters, for the past 8 quarters. However, I still think it's with the price right now, current price right now, I think it's a company to consider holding it or even investing it later on if the price go further down. And so I project the current SSG last month when we presented the company, we projected the sales growth rate as 15.3%. So I lowered down to 13 just to be conservative. However, having said that, I think this is a conservative. 13% is quite conservative. The earning per share growth projection last month was 25%, and I lowered to 8.8% based on the price preferred. Let me pull out the SSG now.
Jane, did they mention anything why the revenue declined?
The revenue declined because even though the revenue declined, I think because of the fact that they are trying to get more traction for their new products. So they are still doing that. And in fact, they have launched a new product. It's called VN, they say VNDR, and it has been launched this April, and it has attracted a lot of customers. And I think they are still trying to develop new products, attract new customers, and it has been proven that their new product is getting a lot of traction. So the revenue has declined because of the current economic situation. And however, having said that, they still increase their full year guidance. The full year guidance has increased slightly by 1% at the mid point, and the EPS guidance has also been raised by 0.14% at the midpoint. So even the management is looking at the year brightly. And I don't think we should panic just because it has declined by 10% since we purchased it last month. And everything looks okay. And if I look at the revenue projection, 13%, and I use preferred procedure to calculate the 8.8%. And so I don't go through it, and I just look at each component, and I look at the average. So I pick up the average, and I use the 15% income tax rate because that's the rate that used by the management in the quarterly report. So I get this 8.8%. And comparatively speaking, compared to 25% we used last month when we purchased it, again, it's really, really conservative. So even based on such conservative earning projection, and last Friday is $103 about. This Monday it increased to $104. But even with that, it's still a hold. So I think we should continue to hold this company, and we should even consider, I mean, if the price go further down, we should even consider purchasing a little bit, because I still think this company is different from the other peers, and it's really investing a lot in building up the platform. It's an integrated platform, and it has a lot more to offer to its customers. And I think it's on the right track, and the management seems to be, if you look at the quality data, you can see that, I mean, of course, these recent 2 quarters has go down a bit, but it's constantly growing. The company is on the right track, and I think with my very conservative projection rates for both sales and earning per share, it's still coming up with a hold. Now it's hold, but last Friday is a buy zone. So I think it's a good company to keep, and we should consider increasing our holding in the future. If it go further down, or if the company continue to grow as it's projected, then we should continue to increase position. That's my presentation. Any question?
This company was rated a #1 in vulnerability management.
Yeah. It's really investing, and then you can see last quarter, it talks about that their operating margin will decline because the fact that they are investing a lot in their platform, developing their platform. But if you look at the guidance for this year, the operating margin is already coming apart with last year. So it's coming up gradually, and it's growing.
Jane, if you look at their kind of their normal PE ratio over a long period of time, it's around 23, 24, and currently, if you look at their current PE plus the PE going, if you take an average, a blended PE of the current plus say 2 years going forward based on their projected earnings, that blended PE is 16. So it's significantly lower than the normal PE ratio that the market values them at. So would you consider buying at this time?
Myself, I actually am looking to buy it myself, even at this price level. But as I said, I have been very conservative with my earning projection ratio and revenue ratio. So I would think this is a good company to consider. But since we just purchased it last month, so I didn't really want to push for this. But I think this is a good company. And I don't know where you got the earning ratio of PE ratio of 23, because I'm looking at the SSG. The average is 40. For
58.
the average is 58. Oh, 58. Where did you see that? Oh, this year. You mean this year?
No, the average price earnings ratio is 52.4 on the bottom left of your
That's
chart.
right, 2.4. So current PE is 49, about 50. So it's considerably, relatively speaking, it's reasonable price currently. But I don't know, it's up to you all because I think we should monitor this company continuously. It's definitely not a sell because just because it has declined for 10% since we purchased last month. But I think it's a good company to monitor, and I think it has potential to grow further. And it's in my opinion, it's a good company that we picked.
Market Watch stated that even though the company beat earnings expectations, but the full year guidance is below Wall Street estimates. That's why it fell.
4-year guidance.
Well,
4-year guidance is below the average. Yeah, it's below the consensus, perhaps.
Well,
but however, it has the management has increased the full year guidance by slightly by 1% for revenue, and also for earning per share guidance has increased a bit. But I think nobody know. We cannot tell how the future will hold. But I think this company, by looking at their earning, the earning release and the management comments and the questions, the way they answer their questions, I think they all make sense to me. And I think we should continue to monitor this company. And if for any reason that the price go further down and the company still look good at that time, we should increase our position. If the price doesn't go down, but the company continue to grow at a higher rate as we expected, then we should also consider increasing our position. So that's my recommendation. Any question?
Yeah.
I also noticed.
You know, Jane.
Yeah.
Very good, Jane. But I did a stock selection guide for this company because I was thinking to put it in my own portfolio, and I used a high PE of 50 and a low PE of 30, I think, and it come out a hold. But I think you used a high PE of 58, and I forget and it comes out a buy. But I think it's a hold.
My buy
I'll go for that.
My buy is very much as you see, and at today's price, 104 is a hold.
Also, what's your starting point?
Okay.
Yeah.
Very good.
I can update my. Yeah. So it's a hold, but I think it's all right, Bernard, that you use 50 for high PE and 30 for low PE. So you are being conservative, but I don't know what revenue and earning growth ratio you are using. So I'm being very conservative on this side. Any question?
I have a question. There's, I guess, significant insider what do you call it? Insider trading from their directors and executives, like 15 million, 3 million, 4 million. Is that a indication of anything?
I didn't look into it, but as long as it's not a huge amount, I usually don't really look into it because sometimes they sell because of their personal needs. So I can't really, look into that too much. But if it's significant, insiders trading, then we should look into it.
Okay. Is that buying or selling, Joanne?
Total selling, insider selling. If you send me, can you make me? I'm going to make myself the presenter.
Okay.
I just want to show what I'm looking at. So Q2. So this is their selling. So I guess might have been events, but this is definitely the pandemic, right? March, January, February, March, April, May, June.
Wait, Q3. Wait, are we at the Q2?
This is
Yeah,
Q2. We're Q3, right? We're in August now, right? Oh, here's the history. So from May, were there like
So,
CFO,
ooh,
CEO?
Yeah, it's a lot of money.
wow. Sell, not buying.
Yeah,
Wondering why.
yeah, yeah. Why?
Who's Peter Pace? Is it
Some
director or
director.
some? Oh, director. Okay.
Yeah.
Oh.
But then again, they only own 16% of the activity. But I just, when I picked up on this from Bernard. Bernard's big on looking at what the
Inside, yeah,
inside trading does. So
So Bernard, what do you think? Because you are very big on insider trading, but you are even considering including this company into your portfolio. What do you think?
oh, that's Bernard. Bernard.
That's right. I'm asking Bernard.
I would go to, I need to go to, I normally go to Yahoo Finance and look it up. I'm not familiar with this here market beat. This might be a good way too. I'm not familiar with it, but that's a real negative when there's consistent insider selling. I I don't like that, but it could. It's not a death, but it's not a good sign. I think a hold is good at the best.
Yep.
I wouldn't sell right away, but
Yep.
I would hold.
Peter still have almost 24,000 shares though, even though he sold 36,000.
But I think insider trading is definitely one factor to look into. And if there are a lot of, apparently over these few months, there are a few insiders trading. And if the amount is significant, then we should definitely look into it. But I didn't look into it when I evaluated the stock this quarter.
Okay. We just keep an eye on it.
Yeah.
Okay.
The CEO is selling too in May.
Okay. So we have 4 minutes.
Oh, Jane.
Yeah.
Jane, I wonder if I can ask a question. I'm
Sure.
looking at Yahoo Finance on their statistics page, and they're telling me that the short ratio of the float, how many people are shorting it, it's 18%. 18% are shorting it. And so that's pretty high. Then I'm looking at, what's it called? I'm looking at, what's it called? Morningstar. And I'm looking at their financials. Their operating income for this year was 72, but they're reporting a net income of 69. If their operating income is 72, they have to take away all the expenses and everything else, but they're reporting an income of 69. That's only 3 that they're attributing to sales, expenses, business expenses, taxes, everything else. So that's not usually the way it goes. And the year before, they reported an operating income of 50 and reported a net income of 57. They said the net income they earned 57 when they only produced 50. And the year before that, their operating income was 37 and they reported a net income of 40.
Is it because they have non-operating income?
Well, well, their operating income was 37, but they reported a net income of 40.
Because operating income should not be gross margin. So are you thinking about gross margin deducting all the expenses to come to net income?
Okay.
Operating income is already a net income from operation, and then you deduct non-operating income, or you add non-operating income, or you deduct non-operating loss. That's how you get to net income.
Okay. Well, I'm looking at gross margin, meaning what they say they're putting aside from their revenues. right? They have a revenue of 231, gross margin of 77. So they're saying they're putting 77% of their income away, right?
Yeah.
But they say their operating income is 37, but their net income is 40.
That's why I'm asking. I didn't look into the non-operating income. Perhaps they have non-operating income.
Well, what non-operating income would they have? Like they have interest earned, investments.
Yeah.
Maybe what they're doing is selling property.
I don't know. That's because it's not significant. I didn't look into it. It's that. Are you looking at a few $1 million?
Okay, but they're doing this over a number of years. You know, so how much property can they sell? How much other money or interest are they earning from other investments?
I think we should look into it when we do the next quarter evaluation. I didn't look into that, but that's a good point. I should look into it and let you know next quarter.
Okay, it's 7:30. Should we start winding up?
Yes.
Okay.
Thank you.
Thank you. Very nice. Very good, Jane.
Thanks, Jane.
Okay, so I guess Hanny.
Any?
Is Hanny still there?
Uh-oh.
I'm still here, yes.
Okay.
I'm still here.
I guess handing it over to you for.
Okay, thank you. Are there any motions, first of all? No? Okay.
We just look at the motion you made early, Henny, to form a committee. Was that your motion? Was the motion about forming a committee?
Well, I was.
Can we take that offline? Can we take this whole discussion offline and Can
just
we
focus on stocks? Sure.
Yeah. Can we make that an executive meeting, Hanny?
We could.
Yeah.
Yep.
Okay. We'll do that offline then.
Okay, so I think we'll open it up to our attendees. And
we don't have any motions to buy any of current tonight's stocks.
Buy, sell. Any buys or sells?
Okay, everything's a hold, I suppose.
Okay, I'm going to stop the recording.